So looking good, still trading above. Candle buys closing above this entire bisi here. Mark it out in blue. It's a little easier to see. But that should be your second stage distribution, so I want to see speed off that quickly up into this high. Then this gap is next. So watch where this candle closes. Should validate this as an order block. We just start trading back up. Looking good. Closing above the 5-minute FEG. Starting to now. Yeah, I trimmed my stop to this low right here. I think this is fine. Intermediate term low. We're close enough to the buy side where it shouldn't really see a sweep all the way lower. There's the first buy side. I'd like to see the 20. If we can get all the way up there. Just pop it. Alright, we'll close it out there. Don't want to get stopped out if it wants to retrace all the way. Just quick in and out. Yeah, out of the highs. I'm the same exact thing. I don't want to see a retracement. I mean, not take partial at 15 instead of 20. Yes, sir. You already know what's. Oh, of course. This is just pop up right there. Oh, did it get the 20? No, I missed it by a tick. Well, there's my lack of patience for you. All right, see you, my man. Good old Mac. Oh, of course, there's a 20. I'll see you tomorrow. You know the drill. Every time I get here, it's late. And there's the run up to the 15-minute fair value gap, as mentioned. So, I mean, clean macro, can't ask for much more than that, right? Traded up, fair value gap filled with the order block, boom, up to 20 points. So we'll screenshot that, send it to predictions once more. I'll send a screenshot of the entry as well. Yeah, I just entered at the buy or exited at the buy side. I didn't want to see a, a sweep of this like we kind of saw, and then it trades all the way back lower, and I get stopped out, and I don't take profit, which I'm fine with. Little 5 points here and there. Sell side liquidity equal lows, really nice to bag. Yeah, I'm still watching down here. I think this sweep. I don't think we got it at ES either. So still relative equal down there, and Q. Still watching that. YM is the only one we have SMT divergence with. So with all this liquidity, especially at 9:30, not taking out shorts. I'm watching that, and of course, it starts climbing all the way back up. So here's the entry in futures trades. The first target was the buy side, and the close was the other three. Just manually closing them out. Yeah, can't be mad at that though. Profit is profit. We'll take it. Where your stops would have been on this trade. So, this stop loss would have been accurate once we've traded up, but let me remove some of this stuff. So, already we're trading up, so we got directional indication, right? That's the first thing for the macro. You need some sort of direction and draw on liquidity. We had the 15-minute bisi being filled, lack of sell side attack right there, traded up through the order block, bearish order block right there, and through these gaps. So I was expecting the buy side to be hit, and then higher time frame, we got that gap up here in gray. So that's our direction. The gap would be this fair value gap here, obviously, and the inversion gap marked out over here. Now, the reason I picked this inversion gap was because on the left side of this market maker curve, this is the only gap here that doesn't have buying and selling efficiently worked through, right? So if you look at this gap, we have selling and buying, and then this gap here was not fully traded through, but you can see what do we have here, buying and selling, right? We have this gap here, buying and selling. This is the only gap where we just have selling. So I wanted to see buying run through it basically equally as fast. That's also a good indication for speed and market maker models, but we'll cover that later. So trade up through it, great. Formed for value gap on top of the inversion gap here. Use it nicely as support, right? You can see the candle buys on the inversion if I remove this, respecting it, right? So stop, once you entered off of this fair value gap, would be probably below the entire fair value gap range. So this 3 candle pattern obviously creates it. So stop would be below here, 15,857. I'm liking that because we have order block, inversion, and this gap. So if you wanted to, really, you could trim your stop to here, 15,860. That's below 3 PD raise. Then once we saw this trade out through the order block, I put at this swing low, and then we just smash all the way through. Another thing to mention is those order blocks that fill for value gaps typically are the the strongest ones. So this here, I like to see it strongly used since we did come down to fill for value gap. But more specifically, when you see those, they're like this one here. Trade up through it. Here's your order block, right? Close back below. So when you come up and retest this one, intermediate term high and an order block filling the fair value gap, that becomes high probability. So that's another indication for high probability order blocks. Here, don't have a gap fill, but we're tapping into a previous one. So propulsion block in there. Excuse me, let me get a drink of water. Remember when you used to place your order on the demo before you would enter? This paper trading stuff has been messed up recently. Let me see if I can find the... Like, all of this in here was all kind of buggy for some reason. I was trying to use it yesterday. Yeah, I do need to start using that more. I'll start using it. So I came up, fill this 15-minute gap. Remove these executions. There's your full buying and selling. So I would like to see, you can see this 15-minute order block as well being used. Clear this up really quick. So tapped into the 15-minute order block there, filling this gap now. I would like to see it reject off of this, or at least start to retrace into 50% of this range. For the macro time, basically done though. Not interested in it anymore. Just waiting for potential reversal up here at 10 a.m.-ish. Obviously looking for a change in state of delivery first. So if we close through this order block, start trading through the 2-minute gaps as such. Good indication we want to start dipping. Just fill this 3-minute gap too. Be mindful of that. A lot of inefficiencies here on the left side chart if you want to look at this as a market maker model, but clear consolidation you could be targeting, right? Clear consolidation, low risk entry. I don't really know where the second stage would be. Here's your 15-minute order block. Starting to trade back lower, looking nicely. Now I need to get through the premium end of this 15-minute bullish order block as well. So I'm watching the high here. If we can close through that aggressively, potentially form a gap. It's a nice 2022 model. Right, we just swept up buy side. Right here. Can remove some of this stuff. I'm watching this gap here. Now potentially, if you want to see this as your time fib stuff, potential breaker here. Right, last down closing candle before the sweep. You can see that as your breaker. Watch this sibi here. It's not really a clean breaker, so I wouldn't really execute time fib on this. Watch how we close on this though. Looking good so far. Now 50% of this teeny range here. Right below that swing low. Obviously relative equal lows down here. And the gap lower. Watch how we start and close up above this gap. Mark out the CPI gap really quick. So it came down, filled the 4-minute gap, and the 3-minute as well. 5-minute, tapped into it slightly there, and just accelerated upwards. So can't look for shorts right now, unless we see a real breakthrough. Still in macro time, like at 10:30. Still trading upwards. Let's look at ES. So dipped into the bullish order block here. Candle bodies respecting the premium end. Got a BPR in here as well. So I'm looking for somewhat of continued climb. Buy set up here. Let me mark this out. Right up there. So watch this BPR. Looking for a potential turtle soup. Where did I just realized the ICT kills and pivots is not on here. That's kind of annoying. let me start moving this stuff. Guess I have to do this later. It's kind of annoying. Whatever. So I traded through the gap up here. I'm now watching. It's kind of all over the place, but we're outside of macro time. So swept buy side, we have turtle soup entry up here, right? Turtle soup. Now watch the inversion gap. Let me actually remove this. Start cleaning up these charts. So tapping at the 15-minute order block, sibi. Watch this gap in here. Potential breaker as well. Short-term low. That has a potential target. I think it's not within discount. There we go. Perfect. Within discount. So watch this gap in here as well. I'm aiming for the market maker model just because we are in premium. So I don't want to take longs all the way up at the top. So I'm watching this gap. Let me screenshot this as well. Yeah, so when you're looking at the market maker models, when you're looking at the left side of the chart, the gaps that are not efficiently worked through typically will create those bounces in price. Obviously, once you sweep targets within discount in a market maker sell model, you'll see the same exact kind of retracement leg. But if you spot a market maker model, a lot of times, unless it's previously worked through, you're not going to see just a quick speed through it. So I'll try and find an example quickly. So I'm still watching this swing low. We'll put an alarm down here in case you want to get down there. All right, so like here's a good example. This is something I was looking at yesterday. But if you look at this as a fractal market maker sell model, we have clear sell side objective with consolidation, right? Filled all the way up to the premium end of this fair value gap right up there. And we start trading back lower. So all of the gaps on this left side, we're going to look at priority of that, then look at the right side chart. So this gap down here you can see is the most obvious one, so we'll use that. Now there was only this slight dip into the gap with selling and then buying again, so you guess you could refine it down even more. But this portion was not efficiently filled. So you can see once we start trading back lower, so this gap here worked completely through with buying and then selling. Same thing, right? Working these gaps, trading back lower. Now, you'll see speed on the right side. You want to see weakness as well. So if we can fill just tiny bits of it like this, that's a good indication that we want to just aggressively trade back lower. But you can see once we dip below the short-term sell side right here, we start trading back up, filling this gap, but more importantly, we're filling the left side, which takes priority. So we're filling this gap, putting selling on top of it, then buying again, and then we leave it. So you don't want to see a return back up into this price point once we leave it, right? You can see that here, wicks up into the discount end, into this order block as well, and then we aggressively trade back lower because there's nothing in here that needs to be balanced again, right? All the fair value gaps in here are all balanced with buying and selling. You can see one right here, selling and buying. So there's no inefficiencies in this price leg after this, right? And there's no efficiencies in this price leg on the right side. So both the left side and the right side are met with their conditions. So then that's what brings about your speed typically in the second stage of delivery. So when you see that second stage of delivery, a lot of times you get the speed out of it once the entire left side is balanced. So it's good because up here, if you see completely balanced price ranges, on this left side chart, and it's basically all below 50%. That's even better indication that you'll get speed just from the top of it. Quickly just boom all the way through. But I mean, in here it's pretty efficient, right? So we got some speed out of that. And speed below there. But you can see this in market maker buy models and sell models a lot of the time. So you can see once we came down, swept out the sell side, this inefficiently delivered price where we had that speed, you see the same exact thing in here, all buying, filling the top end, and then selling, filling it out again. Then we start trading around. This is all in the PMs, so it's not too important to worry about it if it's not precise, but you can see that all over the place. Trade back up into here. Now you can see this. We're balancing this out, so this takes priority. So green candle, selling candle. Now weakness is accepted. So if we just want to come up and IO fed into this like this, that's fine. But we may see another fill, and we can trade back lower. Still looking for this short-term sell side here. We are tapping to the order block. Got a sell limit, 50% of the FBG. Yeah, I don't think that's bad. Right up here at 15,890. Looking good sells. Yeah, I like the sells as well. Now, if we can close below here, that should bring about some speed. So we can look on this left side chart again. So this is all efficiently delivered. So really after we close, we have this inefficiently delivered price, this gap here. Why is the true day open on? Hey man, all good. There we go. So watch this as an order block. Okay, if we can close through it. But mostly efficiently gapped right in here. Maybe might see another retracement, but it's filled in. Probably on the 1 minute you'll see, trade back lower and then trade up. This gap, only thing inefficient that I'm seeing that's obvious. So if we were to come down here, you'd like to see probably a pierce either of these swing lows or just maybe tap into the order block. We see a rejection off of it, maybe filling another sibi. We trade through it again, and then once we trade through it and close below here, so once we see something like this, once this happens here, once we trade below it, we should just see quick acceleration speed all the way down into the sell side. Okay, and then if we have inefficiencies here, we trade up through those gaps, same exact kind of stuff. Do you trade this or do you wait for 1030 macro? I'm not going to be entering in here. It's outside of my specific model. But I do think this is a solid setup, even if you're just targeting this short-term low. So watch this potentially as an order block if we can close through it. Does that make sense though for everyone? All this kind of left side delivery. Now you compare that with the order blocks and short-term sell side in this case, where you would expect to see retracements. So before I mentioned, you'll see those retracements after you get partials taken off within discount of your dealing range, which is, that's assumed. But then again, if you, that's why you're targeting that low-hanging objective, because ICT states, you want to target those low-hanging objectives, whether it's sell side imbalances. But the reason why is because if you see those rejections, sometimes it can come out, stop you out if you're trailing your stop inefficiently. So here is the short-term sell side. So you could be looking at a partial here, partial obviously at the sell side. Not this one, but this one down here. There you go. There's your short-term sell side. Take a screenshot of that. So looking for some speed. Bingo V2. See how we got speed through here? There's no, this was basically balanced, so we're looking for the next imbalanced price range, which if you look at the 2 minute, there's probably something in here. Oh, there you go, 3 minutes. So we'd like to see maybe some trade kind of consolidation potentially. But if you look at the 1 minute, should bounce, take this out. Just watching. Like to be disciplined even though it looks sweet. Yeah. Um, it's very difficult. I mean, for me at least, in the beginning when I started trading ICT concepts, it was very difficult to do that. To stay disciplined and wait for setups to form. Especially when I saw something that was like a 2022 or something like that. Like this to me is a very nice 2022. Um, but you have to get to a point where everything outside of your model is just noise. So even if it's a great setup in the PM, even if it's a great setup in the AM session that's outside of your, say you only trade macros and it's um, outside of your macro time, all of that is just noise. Just think about that as everything is just um, consolidation outside of your zones. You have to just lock in as soon as that time hits your specific, um, whatever your specific time is. But this is a nice silver bullet though too. So if you're trading silver bullet, that's a nice silver bullet model short. Now you can see we're getting some rejection off of that 3 minute, right? But for the most part, we're accelerating down. Now here, so there you could be your second partial, right? Still looking for the salsa all the way down here. But here is where we're trading through it. I want to see it probably trade a little bit through, tap into this premium side of the order block like that. Get one candle, so this candle closes, we get one or two candles that fill the buy side of this, and then we close back below. Then once we see a closer, speed all the way through the low. If we just quickly accelerate, then I would like to see once the sell side is taken out. Isn't this magic? There we go. So there's your green candle filling it. Maybe tapping up into this bullish order block. Sorry, bearish order block. Now wait for the second candle. Hopefully you can get some speed out of there. Maybe filling this gap. And then quick acceleration down into the low. Media rebalance as well. Yeah, I'm watching the CPI gap right now. It's just down here. This is the premium end on the hourly. So if you want to get down there, let me just make sure this is right. Yeah, looks right to me. So this is also another target you could be looking for. So there's your green candle. So inefficient price, black candle, green candle, tap into the order block now. We've got to be watching this inefficiency in here as well. Now regional stop movement I think would be fine if you placed it here. If you want to fill this gap, I don't really want to see too much expansion above it. So filling the gap now. See, we filled all the way up to the premium end. Within premium of this daily range here, that could be another contract if you're looking at it. So once we get through this low, I do want to see speed. Okay, so I'm not seeing any inefficiently delivered price areas in here, so no fair value gaps. And a lot of stack liquidity, so should get speed and acceleration through that low. CPI is at, what is that? 15,790. If we can get all the way down there. So I'm watching this gap here. Maybe want to get into premium with this dealing range. So if we can fill maybe that gap, not the gap, tap into the mean threshold, the order block. I'm watching that. Watch what the candle closes though. So this order block here. Obviously outside of time. So training definitely further for my liking. I wanted to just see maybe this gap fill and dump it off. But we are within premium, I think. No? Let's see. Yep, just wicked into premium there. Okay. So let's see how we want to react. It's a tiny gap right there. Lines on top of the order block. Yeah, that to me is too much of a trade up. May want to come up and fill this entire gap. Hopefully you're able to, if you took that as a short, hopefully you're able to take some partials off. We got two partial opportunities. This swing low here and this rally gap. Both, I think like probably what, like 30 points in profit. I think that's plenty. I got nothing. Full target or die. Let's take a look at DXY. DXY is still trading lower. Also hit 50% of the RTH gap. Let me take a look. I don't see an RTH gap. 84.6. Oh, I see. Right off the low there. Well, another salsa liquidity pool to add to the list, I guess. So this here, I still want to see speed through that low. Unless there's a reason why we have to trace into the right side of the chart, but a lot of sell side there. I hate that all these settings just got messed up. This got to be purple. All the way up to the premium side of the sword block as well. I mean, that's why I'm out. Or I'm not participating in it. It's outside of my model. So I'm not going to watch to see if we want to use this as bullish indication. Did climb above 50% there, the first leg. Top of the volume bounce on the daily. Oh yeah, we got 2 here. I want to see that filled in, hopefully again. All right, you're starting to trade back lower. I'm not really interested in it unless we see some sort of displacement. I mean, that's why you gotta wait for 10:30. So expecting this order block. If you're bearish, you want to see a full trade through there. But I'm holding it right now. Got partial short-term buy side traced into discount, I believe. Tapped it. We'll see what we want to do now. In terms of 10:30 profiles, you already have London high and low swept out, and no reversal at 10 a.m. or at pre-market either. Now this would probably be a good 10:30 to 10:50 trade setup. So if you're looking at the 5-minute chart, which it's not that nice actually. Look at the 5-minute, draw your lines from 9:30 to 10:30. Once the 10:30 candle closes on the 5-minute, reference points, we got no gaps. I'm not seeing really any order blocks form either, unless this down closing candle from 10:25 wants to hold, which it looks like it might. Holding this one, so I'd like to see this range here can hold. Let me tap into it, then look for. We still got to swing high up here at 15,929. Could remove this. Yeah, didn't take a trade yet. I would like to see. Oh, we did close through here. I think it wouldn't be terrible. Put a little demo on. It's not crazy high probability, but we'll just look at targeting the highs there. I want to see a trade all the way through this gap, up through the high. Targeting that. It's probably going to see some resistance here. Probably trade it to the premium end, come all the way back down. But we're holding bullish PD rates for the most part, so I'm fine with it. Wick lower, got a poor fill. Actually worked today. Yesterday was being kind of buggy. DXY dropping off. Let's take a look. Yeah, DXY nicely dropping off there. So it looks good to me. We need to get through this sibi though. That's the only thing. I have this swing lows as the stop loss right now. If we were bullish, you don't really want to see a trade back into there, into this bullish order block. Still need DXY to drop off. Let's take a look at ES. Looks good so far. Bullish price action there. Didn't even get down to the body. Candle closure above here. Need a full trade through that as well. And then up to the short-term buy side. Let me put an alarm up here. Definitely a rough one though. I will say that. It's not the cleanest. And trading back lower. Might get stopped out here. Really want to see that 5 minute. Yeah, the 5 minutes doesn't even look clean, to be honest. So there's your stop out. Running through the breaker. Yeah, that's true. Buys are a little weird there. I mean, we're respecting the bullish PA and traded all the way up through this, so that's kind of why I liked buys. They just take out the short-term high. So I'm watching now if we want to reverse. There we go, starting to drop. So could be looking at shorts inversion, order block here. Obviously speed through this low. Yeah, it's not the best PA. It's probably cleaner than it was yesterday. So I may see rejection off this low, but speed all the way down. First partial, I think, would be fine at the sell side. The short-term low. Might see a rejection filling this gap, but shouldn't see a trade up into here. This should be a breakaway gap. This really too, unless we want to trade up through there, but looking for speed now. Only reason I don't want to see, or may not see speed, is we do have this gap that needs to be worked through. But I mean, looks like we're getting it so far. So all this is efficiently delivered. So should smash all the way through, and then obviously CPI gap lower. Nice speed all the way through. A lot of sell side here. So I don't think we'll just sweep this out and trade all the way back up. There's just no way that I see that happening. I would like to see, I mean, if we want to retrace maybe into premium of this, it's potential, back up into this sibi here. But really would like to see just acceleration into this sell side and potentially back into the new week, not new week opening gap, CPI gap. See the 5 minute. So if you want to look at the 10-20 run up, this one right here, you can see that as an order block, probably on the 3 minute right there. So you can close below here, acceleration all the way into the downside. Then if we want to sweep this out, trade back up into here. It's another thing. Starting to trade lower. So we left this as breakaway as well. Watching to see if you want to wick up into here, but candles basically staying lower. Another speed point through here. Looking good. So watch this. This is another order block. Taps into a previous order block on the 3-minute, on the 2-minute as well. So 2-minute order block. Here should come your speed. Order block there. Perfect. Respect right up to the premium end. Now I just want to see it just run all the way through these sell stops. That was OT. Also just took it. Stopped on first. Second was 3R. Nice. Yeah. I mean, entering long off there. Stopped out. Entered another short. Looking for still sell side. But, I mean, yeah, T, if you had that limit order right here, would have been filled perfectly. Maybe like 3 or 4 points drawdown. Definitely rough PA though. Like, trailing all the way down here and then climbing up, filling this gap all the way in premium, and then coming all the way back down. Definitely is weird. How the time fib look? Let's take a peek. Breaker in here. Yeah, this thing is stupid. There's your time fib. So entry point given. There's some of a heat movement there, but we'll see how it plays out. If we can get sell side all the way down there, I think it might be 2. Let's see if it's 2. Down to 2.5. There you go. All right, let me screenshot this. We'll add it to the breaker. So trading up 50% there. Candle buys holding. Here comes your speed down into the sell side. Trailing your stop to probably the premium of this would be fine. So stop loss here. Perfectly fine. Aggressive stop loss, but holding both of these order block ranges. There's your AM low. Just need that pierce the sell side now. There we go. Bingo. Now I can be looking for 15790 if that's your next target. But can't be mad at that. FOMO not holding. IC says get it first win. Yeah, for sure. It's all about holding full runs is all about it's kind of like those little movements at first. So also why you probably want to take partial here because your retracement potentially up into these gaps. Okay, so watch these gaps. Let me screenshot this. Line these up so it's cleaner. Go to all sell side liquidity, bagged and tagged. So I'll send a screenshot of those entries as well. So took the loss, obviously first. What was that, like entered here. 10-point loss and 50-point win. So I'll send that screenshot. Check futures trades. That was one of those examples where I was fine re-entering in the same macro time. Normally with a 950 macro, I won't enter multiple times because I feel like I have enough practice where if I'm wrong 950 macro, I'm wrong, and I'm just gonna accept that. 1030, 1050-ish. 1050, I'm not gonna put 2 trades on, but 1030, there's all these different profiles, right? So either you form a reversal, sometimes you see continuation. I personally, though, if you do take a loss, I'll try and keep the same exact position size or put it smaller. But yeah, 10-point loss, nothing I was scared of after we took that 950 macro win. But that'll be probably done for the day there off of that win. But yeah, holding for full runs, like in a market maker model, holding all the way for the full terminus of the sell side, it's much difficult than I think people make it out to be. It took me like probably to comfortably hold a market maker all the way to sell. It took me probably 5 months of trading, like ICT concepts in the morning, AM session, to fully hold towards the sell side target. That's why I started off, if you saw those YouTube videos or even were here earlier on the streams, 20 points was just my bread and butter. Like I would literally go in knife to macro, use fair value gaps strictly, no order blocks, and enter off of it. If I got the 20 points, that was it. Even if I had a negative R, some of those trades, which to some people is going to sound crazy, but I had a negative risk to reward ratio. It would be a 950 macro where I saw a setup form, I saw this bisi in here. So say I was looking for this as a long opportunity. So I'd be targeting 20 points right up to there. Okay. And then sometimes my stop loss would be as big, it would be a 1-to-1, or maybe sometimes it'd be bigger. It could be, a negative R. But I mean, when you have a strike rate it's consistent, so if you're taking a trade basically every single day during that time, which I don't suggest doing. But a lot of trades during a week, it's fine to have some that are negative. I think there's a Q&A post, or might be in psychology somewhere. If you look at the psychology section, yeah, there's a post in the psychology section where it's by Austin Silver on Twitter. He was showing where a lot of profitable traders all have negative R ratios when they're trading. They just have extremely high win rates. So they have like 80% win rate, but half of their trades are 0.8 R to R. So their stop loss is bigger than their take profit. All that being said is you just build that muscle memory up of taking 20 points or taking the quick, the first target, the low hanging fruit. And then you just sit there and watch. You just sit there and watch it. If, it reverses, you journal and write down, I'm glad I exited here. It was a good point to exit. I got my profit and it started to reverse. And that's just reinforcing that good thinking habit, right? Your journal's supposed to be the love letter to yourself, is what ICT says. So if it reaches your first target and reverses, you write down, that was great, I exited. If it reaches your first target, reverses slightly, and then continues all the way down, you go, I'm glad I exited here. But for the future reference, it's good to see that it played all the way to my sell side terminus, and it's something that you got to work on, but eventually you'll get better at it once you keep on trading. So we got that sell side sweep, and now we're tracing up into these gaps as expected. I'd like to see a 50% retracement, which we did get. So watch how we fill both of these gaps in here, and then potentially return down to the sell side. Good stuff today. Catch y'all tomorrow. See you, my man. See you tomorrow for the morning stream. So fill this all the way. Like to see a down closing candle now. Place on top of there. Fill like the higher time frames. 3-minute gap. also the 5-minute gap. So if you're looking at the opening range, approaching 1050 macro as well. So look at your 5-minute. If you want to use your opening range model, we already just took out the low, so that was a nice, you know, opening range down to the New York AM low. But if you want to see a continuation, we've got an order block here on the 5-minute, and this value that pairs up with it, and this run up here where we were filling a lower time frame sibi. This becomes a higher probability order block. So watch both these gaps that line up with here. You really don't want to see a trade past the premium end of this 5-minute gap. So really nothing above 15.867. So basically in line with this gap here. And then hopefully a trade back lower. So I'm still looking for the CPI gap, but took it all off there. So if we can trade all the way through there, watch that as inversion. Might see a tap off of it though. We'll stick for the probably till 11 a.m. If you don't get continuation through here, I'm not interested too much. I don't really want to take longs after we see just this sell side sweep and no CPI gap attack. Yes, more or less doing the same thing. Trading up into a 15-minute order block as well. And Q, hopefully getting some speed, but you still need to close through this gap. So I'll look for the discount end. I'm actually curious. Let's take a look at. Yeah, I don't really know. This thing is just down to the -4 too. Here, I'll send a better screenshot. This is probably better, right? Let me delete the old one. That's another one for the books. Yes, sir, out as well. On the funded challenge, so less is more. I totally agree. For sure, man. Yeah, on funded challenges especially, I think taking profit is so crucial. Um, in the eval stage, it's different. I think, if you want to play it more aggressively in the eval stage, if that's something that is in your risk tolerance, I think that's one thing. But definitely in the funded stage, it's important to just stack up those winning days, even if it's smaller than what you would expect for full partials, obviously. So, but if you're trading a 25K account and you're making 200 bucks in it, I think anything around the ballpark of 0.5 to even 1.5 is a very, very good day. 1% is crazy. I think if you make 1% on the day, you should be very impressed with yourself and just take that as a win. Probably when trading more than that. We're still closing through this gap. I want to see it fully close, then use it as inversion. There you go. Like that. But yeah, targeting anywhere from 0.5 to 1% on the day is fantastic. So by any means, if your partial is paying that much, that's really plenty. Even if it's less than that, it's better than losing money. And it's definitely worth, I think if you start your funded account, my suggestion would be that first week or the first couple days that you're trading it, just to kind of get rid of any fear you might have while trading that. The first trade, typically what I do is I'll just put on one micro. This is back when I got super scared trading the funded accounts, but I would literally just put one micro on, click sell, put a 5 stop loss take profit, 5 stop loss, or sorry, 5 stop loss and a 5 take profit on a micro, and I would just let it sit, play out. So that way it's the first trade, it doesn't really matter, because a lot of people will trade those funded accounts and they place so much emphasis on that first trade. But I'll just get rid of it. So watch for us to trade back up into this IFVG potentially, but pretty efficient delivery there, so there's not much we need to get into. Frustrated. Yeah, it happens to the best of us. I mean, this week in general, it's not been the greatest, so you're not missing a whole lot. Um, yeah, we'll see you tomorrow. Hopefully with some better price action and some better trades. Lost my first funded account because of FOMO. Yeah, I think those first funded accounts it's very difficult to trade them properly, especially if you didn't follow your rules in uh, the eval section. If you were taking the eval seriously and you start breaking rules in the eval, you'll guaranteed break your rules in the funded account too. Went from 1 micro to 2, not 10. Yeah, I actually prefer liking or trading micros over minis, especially with smaller accounts. I don't think anything less than a 100K account, I don't think you should be trading minis. That's just my personal idea though. Watch this inversion gap as well, close below it. Like to use it as old selling there. Look for the CPI gap now. There's your 1050 macro as well. Being hella accurate, just need keep missing my entries. Would have taken my positions this week. Up by 6%. Dang. I mean, I guess the only thing you can do is really just journal them. It's really that's frustrating for sure. Want to do that stage 2? Thanks, bro. See y'all tomorrow. See you, my man. You have a trading plan posted anywhere in the group? I do have it's not really a trading plan, it's more of like a rule-based system. So I sent it to someone yesterday. It's basically just these 8 rules that you can apply to. I'll send it in here actually. So if you want it, it's just a PDF. So this one right here, it's just kind of a rough game plan, I guess you could formulate it based on how your model is and what account size you're using. So that it's basically a bunch of stuff that I think everyone should implement in their trading system. It doesn't have to be specific to those, but it definitely, I think, clears some stuff up because when you don't have those rules written out, it's kind of arbitrary, and that gap in, I guess, knowledge and the gap in having rules set out is where you make those errors, right? You go, oh, I don't have a strict trade number I need to follow or a strict number of trades I need to take or a strict macro time. If you have those written out and clear in front of you, this is what I need to do, this is what I don't do, and this is why I don't do it, and then you have screenshots of all the losses you've taken and all the blown accounts that you've done in the process of not following those rules. You have it right next to that, and then you compare the two. I think it's it makes it much easier, at least for me, to follow my rules because I know everyone who's traded, there's been times where you've either FOMO'd or broken rules, got revenge traded, things like that. And a lot of the times it is, I was gonna say it is your fault, for sure, but a lot of times it isn't your fault where you don't have those rules written out and you're trying to trust yourself enough where you get into these markets where it's the smartest people trading it, and you're gonna rely on the fact that you have this mental note of, yeah, if I get to 3 trades, I'll stop, but what's one more? That's where it becomes dangerous because once you break that one rule, all the other rules come crumbling down. So it's good to have some sort of format that you can follow, even if it's just I only take 2 trades a day and they have to be between 9:50 and 10:30, something like that. And it's something about position size. So in there it has the position size max would be 1 mini. Obviously that's specific to 50K account or something like that. But all those things having written down, and then you can go back and go, yes, I followed it, or no, I didn't, and then post the result after. I think that's also an important part of journaling. So trade it up into the IFG as expected. I'm still looking for a trade back lower, favoring the CPI gap. I think that might have been 20 points with the macro. I mean, nice fill up here. Trade it back down 30 points. I could remove this. Oh, let me actually take this poll. So does 4 p.m. or 5 p.m. We'll run it again. Or does tomorrow work better? It's a Friday. Maybe that works better instead of Thursday. We'll do one on Friday, one on Saturday, if that works. Nice candle bodies respecting the discount end too. Or we could do it today, maybe around 6 p.m. I'm trying to think of what's a good time. So I'm watching this gap. I don't know why I have this 11 o'clock. I'm working into this gap right here, filling it. Still need to full trade through here to show you trade back up. You can see it's not the greatest price action, but kind of a clear market maker sell model. Buy side of the curve, sell side of the curve. You can screenshot this as well for your market maker sell model recaps. Let me actually screenshot this, put it in macro view as well. I posted the ones from earlier this week as well, yesterday. So there's a screenshot from 11:14 and 11:13, both in there if you want to add that. Yeah, this time standard deviation stuff is crazy. You could also look at this as a breaker, I guess, too. Another entry point given. We'll look now if you want to tap into CPI gap between -2 and -2.5, potentially. We'll see how that goes, if it wants to play out. But yeah, the utilization. I mean, if you're new to those, if you're new to the time fib stuff, it's just identify your clear breaker. So it's typically your last order block before the move that sweeps out liquidity. You have two sections of the breaker. So if you have a bullish breaker, watch for full closure through this gap and then continuation down. If you have a full breaker, it'll be something like this, right? So we have buy side liquidity up here, and you have your breaker like this. So here's your high, low, higher high that sweeps out liquidity. So you take your fib, your regular fib, and you draw it on here on this A to B leg. Then you take your time fib and you draw it from high to low here. And that's basically just the formula. Same thing with the flip side. So if it's a bullish breaker, you take your high, low leg and you measure your price fib on that, and then your higher high to the low, or whatever it is on the bullish breaker. You drop your time fib on that, and then that's your levels. Obviously, it's going to be, this is still pretty new to me. So all those kind of concepts where you're drawing the fib is kind of arbitrary. But this one's a little bit clear to me, right? We have a clear order block, sweeps liquidity, and taps into a higher time frame POI, which is a really, really good equation for a reversal. So I took price fib, dropped it on there. You're looking for -2 to -2.5 is your first target. Dipped into there, and then -4 would be your next target, which we got right there. You take your time fib, sorry, from your highest high, so high, low, higher high. You could also use this high, but we're going to take this one since the highest one. Turtle soup for the trade back low. So your entry time frame is between -1, -1.5, right there. Then you'll be looking for your target to be filled within the -2, -2.5, which we got the -2, -2.5 right there, right before the -2. And then we dip down into the 4 standard deviations right between here. Now, if it doesn't reach it there, typically you have time dilation, sorry, not time dilation, time distortion between -2 and -4, which just means fancy word for accumulation / consolidation. So sometimes you get consolidation in here, then right around the -4 you see speed towards whatever untapped target there is. So if this -4 wasn't reached in between here, or if the -2.5 wasn't reached between here, the -4 will quickly accelerate towards whatever target is missing. Now, a lot of times, if the liquidity is swept between -2 and -2.5 on the time fib, this -4 just becomes nullified. So you're not going to be looking at the -4. Like in this case, we already met the full market maker sell model within the -2.5, -2, -2.5, and we met the -4 price deviation. So I wouldn't be interested in using this really at all. Then if you want to make it bigger, here's your breaker in here, right? High, low, higher, high. So price fib from here to here, -2 to -2.5 will be your target, and you'd be looking for it to be reached by 12:30. Potentially in here, which I don't think will happen, but just kind of test it out, play around with it, see what works, see what doesn't. But that's kind of what the backtesting stream will be on, how to apply it, specifics for applications, things like that. So we'll look at doing it potentially today at, we'll say maybe 6 p.m. Otherwise tomorrow at 4 p.m. we'll do that. Or maybe 2 p.m. tomorrow. I don't know. I'll send a poll out. That's probably the best way to do it. Yeah, EST. This is all EST. So if you have a time preference, if it's the same as the yesterday, then just vote for that again. But we'll end the stream there. I'm still kind of watching for the CPI gap. We are decently close, but I'm not really interested in this meandering around. So if you want any backtesting data, if you have any questions, shoot me a DM as always. Thank you guys for spending your morning with me. Hopefully it was clean enough for you to take something, or at least learn something from the trade setups, things like that. Yeah, I'll send that poll out and we'll see what the plan is for the rest of the day. So enjoy rest of your day. Don't do anything stupid. Use your proper risk management rules. Until I see you guys tomorrow, stay safe and good luck and good trading. Peace.